welcome to this discussion on central bank digital currencies and what the future will hold, or should I say, how will the future unfold? Let's start off. What exactly is a central bank digital currency? Well, the Atlantic Council defines it simply as a CBDC is a virtual money backed and issued by a central bank. As cryptocurrencies and stable coins have become more popular, the world's central banks have realized they need to provide an alternative or let the future of money pass them by. The Atlantic Council has a great tool to track which countries are doing what in the field of CBDCs, and it currently shows 91 countries are active in this field. My name is Ciaran Ryan. I am the editor of Moneyweb Crypto, and we've got a fantastic lineup to discuss the subject of CBDCs. First of all, I'd like to welcome Chinedu Obidiegwu. I hope I got that right, Chinedu. He's Business Development Lead at Luno, Nigeria. We have Bishnen Kumalo, is Executive Head of Modernisation for South Africa BankservAfrica, and that's the clearinghouse for the banking system in South Africa. And Carmelle Cadet, or Cadet. Carmelle, you must correct me if I got that wrong. She is the founder and CEO of EMTECH, and Carmelle was moderating the previous session on the direction of crypto regulation. So I'd like to welcome you all.
Thank you.
And if I could ask each of you to spend just 30 seconds or a minute introducing yourselves and your organizations. And let's start with the ladies, Bishnen and Kumalo. Could you just tell us about BankservAfrica for people who don't know what it is and about yourself and your role there?
Thank you, Ciaran, and it's good to be here and to speak to all of you. My name is Bishnen Kumalo. I work at BankservAfrica. BankservAfrica is a national payment switch for the South African market, and so we deal primarily with regulated entities in the transferring of interbank payments between one banking institution or the other. We do products, or we provide services in the transfer of electronic funds, real-time clearing, what is known as immediate payments, and other value-added services as well in the non-regulated space. One of the primary drivers that BankservAfrica is to provide the capability for rapid payments, or faster payments as it's known throughout the world, because that is the future for us as an entity, but it also looks at how to facilitate payments as well as to look at the displacement of cash. So we've spent the last 2 years focusing on amalgamating the industry and coordinating ourselves with the central bank and the regulators and the banking institutions within the South African context to be able to provide the service for our citizens. Thank you, Ciaran.
Thanks, Bishnen. Carmelle, did I get your surname correct? Well, I gave you two options there, Cadet or Cadet. But tell us a little bit about EMTECH.
It is Cadet. So my name is Carmelle Cadet. I am the founder and CEO of EMTECH. EMTECH is a technology company building modern central banking solutions that includes digital regulatory sandboxes as well as central bank digital currency platforms. So for us, the future into Web3, into the innovation that's happening when it comes to financial services and the digitization of money is something that's really exciting. And we think central banking in the future can provide financial inclusion by design as well as strong and resilient financial markets. So we build for that, and we look forward to this conversation.
Great. Thank you for that, Carmelle. Chinedu, Luno is a name well known in South Africa and around Africa, but tell us about Luno Nigeria.
All right. So I guess my name is Chinedu Obidiegwu, Business Development Lead for Luno Nigeria. Essentially, Luno is a global cryptocurrency company that is trying to put the power of crypto in the hands of everybody. And of course, that stems from, covering South Africa, Nigeria, and then going, of course, beyond Africa through Europe, Southeast Asia, the USA. We're headquartered in the UK and then have hubs in Lagos here, Cape Town, Joburg, and then also in Southeast Asia. And the aim, like I rightly said, is to put the power of crypto in the hands of everybody, and that's the long, game, and that's what we're working towards.
Okay, and maybe we stay with Nigeria for a minute because a lot has happened in the world of CBDCs, central bank digital currencies. In October last year, the central bank in Nigeria launched its own digital currency, the e-Naira, and that uses the same blockchain technology as Bitcoin and Ethereum. Now, the e-Naira is stored in digital wallets and can be used for payment transactions. According to the IMF, it's currently available only to Nigerians with a bank account, and the aim is obviously to expand this to as many people as possible in Nigeria. One of the big use cases in Nigeria is remittances from the Nigerian diaspora. That's worth apparently about $24 billion a year, and that was in 2019. So if you could just pick up there seems to be a little bit of a mixed messaging coming out of Nigeria about cryptos in general. First of all, you had the central bank of Nigeria banning financial institutions from having any kind of relationship with crypto companies. And yet we hear that crypto adoption in Nigeria is huge. Peer-to-peer transactions are happening at a furious rate. And you've also got this development of the e-Naira. Maybe, Chinedu, you can just spell out what is happening on the ground in Nigeria.
So I think maybe I'll just go back a bit and give a bit of history. Before February 2021, when the CBN essentially restricted the banks from providing services to cryptocurrency companies, Nigeria was flying high, to put it that way, in terms of cryptocurrency adoption. And I mean, this is the general market coming to terms with the benefits that cryptocurrencies provide, and also can be credited to the good work that's been done by the cryptocurrency providers and companies such as Luno and more in the country. Now that was happening, it was supporting a lot of trade, also due to the fact that businesses and individuals found it a bit restrictive, being able to make cross-border payments, and then also found remittance through most channels expensive. However, what happened with the ban is it moved, the need didn't go away, and so it moved loads of the market to P2P or peer-to-peer or underground trading options. And so that's what's happened, and that's why that number has not changed essentially. And of course, the central bank has launched the e-Naira, which from Luno's perspective is a welcome development because it is really an acknowledgement of how far digital assets have come and what it portends for the future. And so it's something that we see as a positive here, and of course look forward to, and we believe that it can function side by side with private digital assets, just like they had done successfully with the fiat currency, the Naira in itself before now. So that's essentially what's happened. Loads of the trade have then gone from the transparent systems to underground tradings going on via messengers, and also via platforms that offer peer-to-peer trading solutions.
Right, and just a follow-up question on that, I guess, how does the central bank or the government in Nigeria view these peer-to-peer trading platforms? Do they frown on them? Are they trying to regulate them? Or are they just letting it happen?
So there's no official position on that, that I can comment on. It's certainly happening, and what I can say is, with the availability of the e-Naira, the central bank is focused on developing from where it is, like you rightly mentioned, being limited to customers who have the bank verification numbers and bank accounts, to working on it to become something that can extend to the other 36% of Nigerians who are unbanked, and who are excluded from the financial system. So there's a lot more focus on that, and also managing um, the currency and inflation rates and the likes.
Good, thanks for that. Bishnen, some interesting things happening here in South Africa. Give us a quick summary of the work that you're doing at BankServ. And I guess my real question is, how far away are we from having an E-Rand, if that is what we are going to call it? And also, who are your partners in this journey? Because I know that you're working, you did mention, with the central bank, but I think you've got some commercial banks on board as well.
So from a CBDC perspective, the central bank, what we call the South African Reserve, our central bank in South Africa, the South African Reserve Bank, is currently running a prototype or pilot in order to explore the functioning and the capability, as well as the regulatory implications of introducing something like CBDCs into the South African financial ecosystem. We at BankservAfrica are forging on ahead with our faster payments capability. Similar to other markets, I know that Nigeria has a faster payments capability as well. And the intention is to provide, as I mentioned earlier, a capability in order to enable faster payments, as well as the erosion on the use of cash in our financial ecosystem. From a engagement, or let's call it a participation perspective, we're working with everyone who participates in the financial ecosystem, subject to what the regulator enables us to do. South Africa, as we all know, is a highly regulated has a highly regulated financial ecosystem. And so all of the partners that we work with are all of the commercial banks. We have already signed up 10 of, including all the major banks within the South African ecosystem. South African ecosystem doesn't have as many financial institutions as some other countries, like Nigeria, for example. We're sitting, I think it's in the early 30s in terms of the numbers. So we have all the major banks working with us. We are also working with other participants that have been cleared by the Payments Association, which is the delegated authority to regulate payments within South Africa. The intention, also looking at partnering with fintechs through the sponsor bank arrangement. That's not our construct as BankservAfrica. That's the regulatory construct within South Africa. For wallet holders or for store of value holders, you need to have a partner or a sponsor, what we term a sponsoring bank, in order to enter the South African ecosystem. The rapid payments capability is currently in build. We are looking to launch it later in the year. And as I've mentioned, the intention is to provide us with a similar capability as you'll find with other faster payments capability, and immediate payment, clearing and settlement, as well as this notion of what we call proxy and request to pay and various other features. Essentially, it's to enable consumers in the South African payments ecosystem, as well as in those banking institutions, the ability to utilize their mobile phones to trade, to exchange value between themselves for those registered customers, both the payee as well as the beneficiary.
Maybe just expand on that a little bit. So a bit later this year, you expect to launch. What exactly, is it going to be a pilot? And when we talk about a payment system, is it going to be a slow ramp up, do you think, where you're going to get retailers who are signing onto it and customers who are signing onto it, basically to test the system and the speed of transactions, which I'm sure is something that is being piloted or tested at the moment? Give us a little bit of insight into how this is going to roll out.
So we're going to go with a slow ramp up. We believe that it's not an automatic switch for those consumers. South Africa has got a large bank population, but a significant proportion of that banked population are social grant income recipients. and what we term the underbanked, those individuals who have a bank account, use it perhaps for salary purposes, draw it down, and then utilize cash for the remainder of the month. And then again, at the time of receiving whatever form of payment they're receiving, be it social grant or be it salary, they draw it down. So we believe, Ciaran, that the switch is not going to be an immediate one. It's going to require a lot of consumer education in terms of the capabilities that we're providing in relation to the product is called rapid payments, in relation to rapid payments. So we believe that the take-up, we are going live. We are looking to go live incrementally, and we're adding features. And the only reason we're doing that is because we're following an agile approach, and we're deploying features in a sequential process in order to first contain the capability to one component, and then we add the additional and the enhancement features as we go along. But in terms of adoption, which is a critical component of any launch, of any capability, whatever the payment capability that we're launching. And for us in South Africa, these are considered new rails. These are new payment rails. They're ISO 20222 compliant. And so for us, the adoption, the take up by the end consumer, we expect it to be gradual as we are articulating the benefits and the ease in which they can facilitate their payments using a mobile phone without having to go into a bank in order to do those transactions. And so it's going to be gradual, definitely.
Just a quick question on that. So in South Africa, there are about 17 million, if I remember correctly, 17 million social grant recipients. That's a hell of a chunk to do in one go. Is the idea that you would take a section of that at a time and just build it from there? Is that how it's going to go?
It's really on the consumer. We are engaging with the social grant agency, SASSA, as we commonly refer to it in South Africa, in order to determine whether and how we can facilitate those payments. The intention for rapid payments is to displace cash. It's not necessarily, I don't want to phrase it as a social replacement for SASSA. Our engagements with our citizens to have multiple ways of receiving income grants, be it from a bank account, be it from them directly, as well as potentially exploring RPP. So the RPP journey, the rapid payments journey, apologies, is not just about the social grant take-up. It's also about those wider sections of our communities that are largely steeped in using cash on a day-to-day basis, or as I've mentioned, those underbanked who use it only partially. So with that entire ecosystem, as you can imagine, there's multiple players in this ecosystem. You have spaza shop, what we call small shop owners in our communities. You've got person-to-person payments that we'll be providing access to. As these communities are starting to utilize the digitized form, the digital currency, that's when we expect the ramp up to start to occur, and therefore the displacement of cash. It could be occurring with social grant recipients, as well as those members of our society who are largely cash-based.
All right, Carmelle, we kept you waiting quite a while. I was listening into your previous discussion there about the future of regulation and whether it stifles innovation. Very interesting. I'd like to hear from you. One of the questions that often gets raised with regard to CBDCs is this is being proposed as a way to accelerate mass adoption for the unbanked. And do you see this as something real and imminent? It sounds like the regulators are certainly fairly slow. I mean, even if we look at South Africa, we were supposed to have regulations last year, and I understand the technical challenges involved in that. But do we need regulations before we get this mass adoption, or is it really, are the technical problems solved, and what's holding everything up?
Well, I'll share my journey into building EMTECH to answer the question. When I started EMTECH, it was because we saw the central bank digital currency as an opportunity to solve for financial inclusion. So the simple idea was we've been asking the banks to bank the unbanked, And it's very difficult to do, and the business model and so on. There's a list of reasons as far as why that's not happening as fast as we would want. Then mobile money stepped in and filled some of the gap. But then again, how do you provide really a rich value chain for low-income people as they get into the financial service? And the idea was, well, they use cash, and the problem with cash is that it's paper-based. And if you need access to digital services, you have to go to the banking system or to another intermediary. What if we put cash on a blockchain, knowing what we know about blockchain, being able to provide wallet and individual reach and providing that without the need of intermediaries or branches and so on. But as we talk to central banks, in order to use CBDC for financial inclusion, you can't just think about the banks, right? And it defies the whole purpose because the banks will tell you, well, it's not really broken. I mean, yeah, we can improve, we can have faster payments, we can have so on, right? But if you're solving for financial inclusion, you have to realize there's a big gap that's left that, by updating the speed of the banking system, it's not addressing the unbanked. And that space you need to provide, or at least recognize that there are new intermediaries that can do a better job at reaching unbanked and the underbanked. And how do you create a regulatory environment at this point to leverage that, right? Because it's a new distribution network. And what we found out is that most central banks, they think about regulation in the context of traditional banking. And we know that the emergence of new products are very different from traditional banking. They are more nuanced, more technologically driven, natively even. And now you put all of that in stage and time where we're talking about virtual money, virtual assets. That's really a leapfrog as the regulator is trying to figure out what is the ecosystem going to look like. So that's when we realized that there is a need for regulatory innovation in order for CBDC to be adopted more broadly and more efficiently. Because you need fintechs, you need to think about how fintech need to be regulated. And you just need to really think about a modern or more inclusive ecosystem to use CBDC in order to reach some policy goals.
Right. Just to follow up from that, the rate at which we're seeing mass adoption, are there any sort of standout countries or jurisdictions in the world that are impressive in this regard? Or are we all kind of waiting for somebody to move first?
I mean, so Bahamas was the first one to actually go live, right? To show that it could be done. I call it the proof of concept seen around the world. But given the size of the Bahamas, not everyone, the line goes, well, Bahamas can probably do it. Can South Africa do it, right? Those are two different things. Bahamas did something, but will it work in Nigeria? And what you're finding out, of course, I like to say that no two central banks are alike. And that requires a level of configuration and understanding the local market. And when you think about the Caribbean versus Nigeria, right? Two very different topology of ecosystems, where in the Caribbean you have a very thin, set of stakeholders that are providing financial services, whether they're foreign banks and fintechs and so on. You're seeing that emergence kind of starting out, but it's very, very different than when you go into Nigeria that has a very well established banking system, a very deep fintech ecosystem that's booming, emerging. And so when you're building CBDC in those markets, you have to think about the central bank and the role that they would play given their ecosystem. And therefore, that adoption is going to look different in each country. So Bahamas did it because they could not rely on, partly because they could not rely on the banks that they had locally to do that transformation. So they went for the financial inclusion play. it went straight to the fintechs to plug in and onboard them. And then the banks are getting on board now, from what they announced. But then you look at Nigeria, where Nigeria, the fintech ecosystem is asking for that, right? They're asking for that engagement, and the banks as well are at the table engaging and so on. But if you look at China clearly laid out a model that worked for them as far as how quickly they got this adopted. So there's a bit of mandate and there's a bit of having an ecosystem that's ready to go as well, that come together for China in the wide adoption that they already have, especially during the Olympics.
Just quickly explain in Bahamas how the central bank there brought up the CBDC into existence, and how great has been the adoption.
Well, I was part of the early days, so I'll share what I know from the early days. But since then, I think the central bank has published some results. But the mandate at the time, I mean, the Central Bank of Bahamas published an RFP, opened up a tender, and welcoming participants and technology players to bid for a solution that would help them modernize their payment infrastructure, and as well as help them solve the financial inclusion problem that they have, given how diverse and dispersed the islands are. And they have about 400 islands kind of like spread out, and sometimes it's very hard to get cash. And we saw that in the middle of them starting the pilot, major hurricane had the need to provide digital currency into the different islands, and they couldn't do that, and that really motivated them to continue to do that because it really showed a problem. But you know, from a leadership perspective, if I kind of highlight what worked well, in my opinion, from a leadership perspective, the central bank governor was really in the forefront in driving this and really understanding the need to provide that modern infrastructure. But then you saw the engagement itself. So I had the opportunity to fly down to participate in the pilot. The engagement itself, having a pilot phase, engaging stakeholders and local stakeholders, where a grocery store, actually the governor was the first one to do the first transactions, going into the grocery store in an out island, not in Nassau, but doing the first transaction and buying a bottle of water at the store and paying for the $10. Right, and that itself, I think, when you think about the just the leadership, the execution, and the phased approach, but not too long, right? Because they wanted to actually move this faster, so within I think 6 months, they did the first phase of the pilot, which was a tall feat for the providers. But I think they did it very successfully in being able to engage local providers to test this out in a smart way.
Okay, interesting case study. All right, Chinedu, Carmelle has just mentioned the growth of the fintech sector in Nigeria and the growth of crypto adoption generally, which you mentioned in the opening there. Really, is it a function of a loss of faith in the Naira? I'm talking about the fiat. People are looking to externalize or to hook their wealth onto something a little bit more stable and reliable. What is driving this fintech explosion and adoption of crypto in Nigeria?
Okay, so the fintech explosion is just really driven by, I think, in its base form, the maturity of the payment ecosystem here in Nigeria. I mean, it is so advanced. You have real-time payments. You've had that for a while, and many companies are building on that to offer customers, even better services. So that speaks to the growth in the fintech space, and loads of the providers here in Nigeria are also then looking to take this achievement that's been made here in Nigeria and expand to other regions across the continent and even beyond. So that's exciting for investors and also for other countries looking to achieve the same level of efficient and available payment systems. With crypto, on the other hand, I don't think it's necessarily loss of faith in naira, even though the currency, has struggled with stability in a while. The large use case we see is investment. I mean, when you then think about the fact that Nigeria is largely a young population and the unemployment rates have increased over time, people are looking for opportunity to maximize value, and cryptocurrency, even with its volatility, has proved to be a viable option. And so loads of people have, turned to cryptocurrency, not necessarily as an alternative to naira, but as an investment option. That's one major use case. Of course, there's been other things, with the huge pressure here for we're trying to obtain, say, foreign exchange, for cross-border payments. Many people and businesses have also found it easier to complete these transactions using cryptocurrency. So it's largely a case of value, considering that Nigeria is also a heavy trade dependent company. So from imports, exports, looking to make cross-border payments in a cheaper, faster, more efficient way, which cryptocurrency seem to solve for. And also, there's also the remittance case, which had increased significantly over time, via cryptocurrency rails. So those are the things that have driven the increase in adoption in cryptocurrency. And of course, Nigerians are very, very curious people, and have also just always eager to, catch on what the next best thing is and to maximize value from it. So those are the reasons why I believe cryptocurrency adoption has improved. One more thing, the number of cryptocurrency providers have increased. The media has also become more favorable towards crypto news and information. So there's a lot more education going on. Luno has both privately and partnering with other providers, made it much more easier for people to access information around cryptocurrency, to stay safe, how to play safely, and also how to identify, wrong, negative players and to avoid them. So all of that has also just come together to make people more confident around cryptocurrency, and it's added to the adoption.
Just following on from that, in South Africa, you've seen some of the commercial banks, they've cut their relationships with the crypto exchanges, I think primarily because they're a little bit concerned about the regulatory grey land or no man's land that they occupy at the moment. So, but you can still on-ramp. For example, if you're a Luno customer in South Africa, there are still some banks that will allow you to on-ramp to Luno. How do you on-ramp as a customer in Nigeria?
So in Nigeria currently, since the 5th of February 2021, all the relationship between cryptocurrency providers and all the banks, financial service providers, and the likes was severed, essentially. And so a switch to peer-to-peer platforms or option is what has largely happened in the country, and with various results, particularly the fact that while people have moved to peer-to-peer platforms, and these can range from these peer-to-peer platforms being provided on, established companies or exchanges, to even transactions happening across social media, WhatsApp, Telegram, and the likes, which just takes away all the visibility which the government and all the stakeholders enjoyed. And then you now have customers largely at the mercy of, established individuals and people who participate in these spaces, and all the mercenaries and even the uh, for want of a better word, the bad actors who play in this space. So it has come at, that level of cost. And there's been a lot of action and move from the stakeholders and in Nigeria to try and get regulation going, because this is something that we have been pushing for before that policy came on board, as a way to curb, the action of bad actors and to ensure that there's a lot of visibility and we can manage and enable customers to play or interact with cryptocurrency in a protected, visible manner.
All right. Thanks for that. Bishnen, there's a question come up here, and I think it's a good one. Is CBDC not just another way for governments to control citizens? Now, just maybe as a bit of background there, the great fear with China, just before the Olympics, the Winter Olympics, launched the E1, its own digital currency. And they, of course, have a social credit score system there where if you misbehave, you get demerit points. And if you behave fine, you can sort of redeem yourself. But the social credit score system, they can exclude you from a range of different government services. You might not be allowed onto a bus or to a plane. And I think people have an understandable fear that when you have a CBDC, that all your purchases can be tracked. People might be purchasing pornography online or guns or something that they probably feel a little bit embarrassed or ashamed about. They don't really want government spying into all of that. Maybe answer that question.
It's funny because when cryptocurrency was created, or at least the blockchain via the Bitcoin, it was to create an ability to do the transfer of to do the exchange of digital exchanges without including any regulation. It was about the untraceability and for individuals to be able to own, because there was this massive distrust around central banks. And I'm sure everybody's read the white paper that is it Satoshi Nakamoto, whether it's a person or it's a group of people, wrote and created, the script for the first blockchain. It was about the ability to exchange value in a secure way, in a trusted way, non-repudiatable, but also relatively anonymous. And the way that CBDCs emerged was in order to contain or to manage some of the issues that a free and untracked capabilities, or rather without the intervention of a central authority like a central bank, that kind of free market exchange, without any of these interventions. And now you get questions like, is CBDCs, which is based out of the blockchain capabilities and where cryptocurrencies emerged from, a way for governments to track? It wasn't created intentionally, or cryptocurrencies they were created intentionally not to create this kind of centralized oversight, but it was necessary from a regulatory point of view in order to be able to introduce cryptocurrencies in all of these economies so that the fiat currency and the CBDC could coexist. I think, I believe that depending on the type of blockchain that's used and the encryption keys, the ability for states and governments to be able to track where payments go is probably something that all citizens are concerned about, from tax purposes to legality purposes. On all digitized payments, all digitized payments are traceable. We know who the payer and who the beneficiary is. I don't think that CBDCs are more nefarious than any type of payment that is visible to the central bank. So for me, it's not just about governments looking to be able to track. Anything that is digitized leaves some traceability, and that is what we in the financial inclusion space, or those who are concerned about financial inclusion, have to balance the needs and the benefits that are well documented worldwide that financial inclusion creates in each society, coupled with I want to be able to do this and to transact freely without anyone having oversight. I want to own my own data. I want to own my own wallets. I don't want a central bank intermediary. I don't want a commercial bank intermediary. I don't trust anyone, and therefore I trust that this capability is secure. It's that ecosystem, and it's that balance. When you think about money laundering, when you think about terrorism, when you think about the other things that societies generally, whether rightfully or wrongly, trying to contain for the reasons that sovereign entity or that country exists, I think it's effectively it's a balance as to the needs, and we believe the needs of the financially the non-participants in the financial ecosystem outweigh the possibility of them being tracked or for governments to know. And I think that in South Africa we have real socioeconomic needs, and I think throughout the continent we have real socioeconomic needs, and we really need to balance what our aims are. So I think CBDCs are a great tool for financial inclusion, as Ciaran said, as Carmelle says, apologies. But I also think other forms, all forms of payment, digitized, distributed, where you have a payer and a beneficiary being able to seamlessly transact peer-to-peer, is the goal. And I don't necessarily vote for one over the other, as long as it facilitates our ability to uplift our societies in that sense. And so I don't think that in South Africa we are as steeped and concerned about being tracked. And I can understand why that's a reality in other ecosystems. But again, I think every government has to balance as to what their needs are.
Okay, great answer. We've got very little time left, so I'm going to ask each of you to wrap up. And let's just look here to the future. What can we expect in the world of CBDCs? Bishnen, if we can stay with you. Over, let's say, the next year to 2 years, where is this going to take us? What's the landscape going to look like a year or two from now?
I do believe that the regulatory landscape, international regulatory landscape, as well as our localized landscape, is going to need to start maturing. The wave of digitization and the exclusion that our large members of societies feel and experience, and the results there too, from a socioeconomic standpoint, require the regulators throughout the continent, and probably globally as well, to start thinking about how each of these capabilities like CBDCs can be introduced safely for our citizens. And I think that regulation needs to start keeping up with the pace of the digital innovation that we see. We need to open up the landscape to not just commercial banks, to other players as well, in order to ensure the more capabilities that exist in the ecosystem, the more options there are. So I see that growth in terms of opening up the regulatory landscape, more innovation coming, whether through commercial banks and through fintechs, and those partnerships that will result as a result of that, is probably where we'll see ourselves in a year's time.
Fascinating. Carmelle, in your previous your previous presentation, you mentioned that currencies are jurisdiction-based. Now, if we take that, it's unlike Bitcoin or Ethereum, which really doesn't have a national boundary. Where do you see this in a year or two from now? Are CBDCs going to become huge relative to the scale we see happening with Bitcoin, sort of a $2 trillion ecosystem, or is it going to be much bigger?
Well, I'll second what Bishop actually mentioned before. I think you're going to see a landscape that demands and honestly relies on a combination of CBDC and other forms of digital currencies, whether it's stable coin or crypto specifically. Because if you think about each of those, they are designed or they serve a different purpose, right? Crypto will never be a legal tender. That means the central bank and the government would actually have to make it that. So except El Salvador, and you can find the examples where you end up adopting Bitcoin as a currency, right? But there are certain unique capabilities when it comes to sovereign currencies that will continue to be unique, and central banks essentially using a different technology to introduce that sovereign currency. That's really what we're talking about here. And I did a presentation yesterday on when you think about how money is created and distributed, we're all using central bank money. We are all using central bank money. It's really about who is the intermediary making our life easier and using that central bank money. That's really what it comes down to. And when you think about it, the introduction of crypto and stable coins is a different way of creating value on top of central bank money. And I use an example where if you're a central bank and you're limited to how much money you can print, and we all sometimes complain about how microeconomics and monetary policy is devaluing currencies and stuff like this. So you're a central bank, you don't want to print more money, so you issue $100. That's the only supply into the market. Someone deposits, takes this $100, say I'm going to use a bank, and puts it in a bank deposit. Okay, great. So the central bank is no longer your direct claim. You have a relationship with a bank. You keep that $100 in the bank. Then you decide to buy Bitcoin with your fiat, and then Bitcoin goes from $1 to $100 the next day, and then you say, I want to cash back out into central bank money because I want to keep it in the bank, and the central bank says, wait, I didn't print more money. Who's going to give you the difference, right? So you have a gap into how value is created and how sovereign currencies are maintained and managed for stability, for sovereignty, for everything else. So you have a gap that's increasing. I think you're going to see a mix, and as Bishop said, a balance between who continues to rely on fiat because it provides something unique and the risklessness aspect of it. We could argue whether countries are strong or not, but then you would say, okay, who's stronger from a risk perspective, the SARB or the Bitcoin algorithm? It's a very important question, right? Who do you trust? And sometimes you're going to trust part of it, part of your money into an algorithm, but you're probably going to want to make sure that you have something that you wake up tomorrow and you know that is going to be there to put food on the table. And I think that's what you're going to see over time. And another point that was brought up, I think you really did a good job, Bishop, in thinking about there is something that we're not talking much about yet. This is the regulation around adoption of CBDC. And who will be the new intermediaries that start embedding or using CBDC and distributing CBDC in the broader market for the purpose of adoption. And we have some thoughts as far as how central banks should build for that to happen. If you want to build for financial inclusion, if you want to build for mass adoption, two things. Building as a modern infrastructure for fintechs to be able to plug in and natively thinking like that. So open banking standards and APIs and data protection and things like this are things that you need to think about. And then really thinking about, what are the new products that are going to use CBDC? And now we're talking about digital currencies. And if you don't have a fintech regulatory framework yet, or have not regulated fintechs into your economy yet, I think those are things that are going to be very, very important.
Great, thanks for that. A couple of comments here. We should maybe bring up how the banked become unbanked. And disagree strongly. Lack of trust is strong with anything government implemented. That's, can we trust the government? I think this is a question a lot of people are going to be.
Yeah, if that's okay, I'll jump in, right? Because, by the way, I'll disclose, I'm originally from Haiti. you know, I grew up in a very tough space when it comes to politics and government. So I really have an appreciation for how everything can be corrupt and still trying to survive through that. But I think one thing is important to recognize is that, like I said at the beginning, we're all using central bank money today. And it's not, and introducing CBDC is not a change to that. It's actually a different technology to that. But also, I think the question is, when you think about privacy and trusting intermediaries, you trust your bank today to know every transaction that you do with your card or through your bank knows how much you get paid, how you spend your money, how you don't spend your money. And I think you go to sleep at night being okay with that, right? And the question here is whether you believe that the central bank is not getting this information just because you don't think about it, does not mean it's not happening right now, right? And the introduction of CBDC is not going to change that, guys. And let me highlight also that the reason that we're big proponents of blockchain when it comes to this is because there is a level of trust. Actually, trust is a key factor in adoption. We talk about regulation as key being to adoption. I think trust is also a big adoption factor when it comes to CBDC. And I testified to that in Congress to say, don't bother, right? Don't bother building a CBDC if you're going to build something that people are not going to trust, because that would have been a big wasted effort and not seeing adoption. So that's my position. I think sometimes people think that the central banks don't have this stuff today, but they already do. They already do.
Great. Thanks, Carmelle. Chinedu, we're going to end with you and your thoughts about this. And where are we going to be? Maybe talk to Nigeria.
Can you hear me?
Yeah, I hear you. Where are we going to be 2 years from now with CBDCs in Nigeria?
Yeah, okay. Can you hear me? I think my network just went crazy for a bit.
I hear you.
I think I'm really aligned with what Bishnen and Carmelle have said. One of the things that we really expect to see, over the next couple of years is stronger regulation, which takes into consideration the position and the needs of the central bank as well as the people. And what we strongly believe, like I said at the beginning, is these things would coexist. And as has been said earlier, every central bank is different, and is already approaching the development or not of CBDCs, based on their various needs, and that's not going to change. And then, of course, it raises the question of how CBDCs are going to become interoperable, in the future, to support things like cross-border payments. And if that doesn't fit into the design today, then we're just building for maybe the same kind of issues that countries and cross-border payments face currently. So those are things that I expect that would happen, but largely strong regulation coming through. CBDCs also just being designed to add value and to solve a problem, whether it's financial inclusion, which is also going to force a lot of development with for the things that financial inclusion require beyond even money. All the infrastructure that needs to go in place, for countries and location regions where that is not available today, to all the collaborations that need to happen from the design point of view down to implementation for cross-border payments to become, smoother, cheaper, faster, easier, and all the good stuff that, people expect. And of course, like has been strongly muted, trust is a huge part of this. And I guess, just like Carmelle was saying, the noise around CBDCs kind of make people more aware of the fact that trust is needed for these systems. But the financial system as it is today, had all these elements, and all that is happening with CBDCs is just the change of the technology through which central banks, serve the citizens' money, right? And all the various attributes and benefits that can be realized through this new system. So that's it in a nutshell. Stronger regulation, and then a stronger push for interoperability. And the fact that cryptocurrency, stable coins, and the likes will still be in existence and still grow, as they provide value that maybe CBDCs may not be able to provide regardless.
Wonderful. Thanks. We're going to leave it there. I think that was a fascinating discussion, and I think the people listening in agree. I see there's a comment there, fascinating insights. I certainly feel a lot more enlightened about what's going on. And I think this is a space that is really going to come to dominate, I think, the crypto and blockchain discussion in the years to come. Thank you all very much, Chinedu, Bishnen, and Carmelle, for coming on and sharing your insight. It really was a fantastic discussion.
Thank you for guiding us. Take care.
Thank you.
Bye, everyone.